Well, a very good afternoon to all of you. It's really great to be here. Thank you for staying right to the graveyard session, but I guess you got to pick the stock, not just pick the market. So nice to be here. Thanks to the Reed team for inviting us to participate. As Southern Palladium, we will become a PGM producer, so it's not just palladium, Paul. It's platinum, rhodium, iridium, osmium, and ruthenium, if you want the full list of the 6 PGMs that we're going to produce. Yesterday, at the beginning of the discussions, Grady Wolf gave a bit of an input saying the best performing precious metals out there were gold, and she really focused on gold. I just want to ask all of you here today, what really was the best performing precious metal in the first 6 months or the first period of this year? It's actually platinum. Platinum group metals, platinum's up over 53%, palladium's up just over 30%. If you look at ruthenium, the price has doubled. So the best performing precious metal suite has actually been platinum group metals. Let me just jump into very quickly. That's the disclaimer. We won't test you on the last paragraph at the end of the session. But just to very quickly highlight, all major economies have classified PGMs, platinum group metals, as critical minerals. China, US, Australia, Canada, UK, US, India, as examples, have designated PGMs as critical. They are critical and strategic, and there's a number of reasons for that. They have critical roles to play in a number of industries, and in particular in the clean energy, automotive, and electronic sectors. But even in the medical sector, as an example, 600,000 pacemakers that are installed worldwide every year cannot be done without platinum. Platinum's in every one of them, as an example. In Australia, 99% of the vehicle fleet here is hybrid or ICE, internal combustion engine powered, and they are cleaned by using platinum, palladium, rhodium catalysts and particulate soot filters if they're diesel vehicles, making Australia's cities some of the cleanest cities from an air quality point of view in the world. So just to highlight, in the automotive sector alone, some 3 million ounces of platinum are taken into CATs, into the catalytic converter side. In palladium, it's 8 million ounces goes into catalytic converters. So just giving you a size of the scale that we're talking about. But there are diverse applications for the products, all the way from automotive, industrial. Very interestingly, more than 2 million ounces of jewelry demand we're expecting this year in 2025, with China in particular buying platinum jewelry as a cheaper entry point compared to gold, and because it's a store of value for them. And then in the investment side, we've seen significant growth. We're expecting 700,000 ounces this year, and we're looking at some interesting developments taking place on clean energy through clean hydrogen being developed, and the previous speaker was talking about clean hydrogen. And then over the last period, we've seen significant improvements in the sentiment around platinum group metals, and again, just to highlight best performing precious metals, or PGMs, this year so far. Southern Palladium is a PGM producer. We are located on the far eastern limb of the Bushveld complex in South Africa, what we call prime PGM mining real estate. If you want to be mining platinum, that's where you got to be. South Africa has 86% of the world's reserves and produces 70% of world platinum and rhodium supply and about 40% of the palladium supply. We're in an area where all the majors are participating. Some people ask us, well, why didn't they buy and take over your project and develop it first? Well, we kind of like fell through the cracks, and it's always those projects you want to be involved in, because we've really been able to demonstrate over the last 3 years some significant progress in the project. Well-established tradition of concentrating the ores on site and trucking the concentrate across to the western limb, where the smelters and refineries and the 4 majors are located, and we've already had discussions with them about offtake arrangements, which we'll finalize over the next 6 months to 12 months. Quick look at the corporate side. Southern Palladium owns 70% of the underlying asset, the Bengwenyama project itself. It does have an interesting name of a company that owns a little asset called Miracle Upon Miracle Investments. I'll talk to you about that over a beer outside later. Our community own 30% of the project. They've been in the area for 150 years. They are very supportive of what we're doing, and through the traditional council, they have got a special purpose vehicle, Neuronox Investments, which owns 30% in the project itself, and they also own 8% directly in Southern Palladium. We've got quite a tight shareholder base. We've got 107 million shares on issue. The share price at the close today was 64 cents, giving our market cap just under 70 million Australian dollars. We've got $8.5 million in the bank. We do have a number of instos, which haven't got on the list here, as shareholders, over 20% of our shareholding base. But if you look at it, our top 20 holders own 70% of the company. But we're certainly getting a lot more retail interest in the equity as we go forward. Listed on both the ASX as SPD and on the JSE as SDL. It's been interesting to see a bit of the arb trade taking place between Johannesburg and Sydney. We've done 30,000 meters of drilling. We've proved up a 40 million ounce resource, which is very significant. 6.3 million ounces reserve. And so when you look at the chart on the right, you can see a number of producers around us. Platreef and Waterberg, actually to the north of us, they haven't yet solved their met problems. We produce a stock standard UG2 ore, which is very smeltable and refinable on the Western Limb. And then you can see a couple of the other competitors, including some Australian competitors who also haven't solved necessarily the met issues that they're going to have to deal with. The project, just from a map point of view, we've concentrated on the eastern portion of the boundary. We've done a whole bunch of work in the optimized pre-feasibility study, which now is enabling us to develop this genuine tier 1 asset through a two-stage process. We're doing it typically the Australian way, to do it in a two-stage process. And that's enabled us to reduce the total peak funding requirement by 38% to 279 million. I'll talk about that in a second. This two-stage approach, the sudden decline, we're accessing ore at pretty much 50 to 60 meters. So that's very shallow. Deepest part of the ore body based on these tenements is about 500 meters. And we haven't done much work on the western portion of the farm, but we do have drill results from other companies that have done drilling on the boundary fence, and that's confirmed the integrity of that ore body, looking very, very interesting and very good. The optimized pre-feasibility study and a two-stage approach means that our total peak funding requirement is about $279 million US. We can fund the entire second stage through our cash flows generated from stage 1. Stage 1 in its own right can be a mine in its own right. It's got a 22% IRR. Just to highlight all the NPV numbers that we're using, our current NPV at 857 million US is based on our pre-feasibility average price deck, which is about 13% lower than current spot prices. And effectively, if you add in the uplift that takes place, it adds nearly 175 million onto our post-tax NPV. Basically, our post-tax NPV is sitting at $1 billion US. So really nice gem size project that we've got here. Stage 1 producing 1.2 million tons of ore per year and 200,000 ounces of PGMs. And when we include stage 2, it'll take it up to 400,000 ounces of PGMs. It is high grade. We don't have chrome stringers in the roof wall, which other companies to the north of us have to deal with, which means that they've got a mining width of 1.2 meters. We're mining at a meter. The actual ore body is about, the actual reef itself is about 73 centimeters, so we've got a much lower dilution rate, and that's really a big advantage that we have. And so we're in the lowest cost quartile of the cost curve and on an all-in sustaining cost basis. And when we get to stage 2, we're looking at $821 on a 60-ounce basis, all-in sustaining cost, which is very globally competitive. And a very nice IRR when stage 2 is also then developed at 26%. And again, that's on the numbers on our pre-feasibility numbers, which is a price deck slightly lower than current prices. This just gives you the cash layout in stage 1, stage 2. You can see the project in itself is extremely cash generative. When you combine these two together, we'll be generating $220 million post-tax on an annual basis. So that's a very significant funding that revenue that comes through from the project. Stage 1 is not dependent on stage 2 happening. A lot of projects, people have to get stage 1 done, and then they have to do stage 2 to make the whole project economic. Stage 1 by itself is economic in its own right. The tapering off that takes place on the revenue side is a bit academic because we've only explored the eastern side of the property, of the tenements. There's a lot more work that we'll do on the western side, and again, we're looking probably more at a 50-year mine life than the 30-year mine life that we've got in place at the moment. This just quickly highlights the south decline being developed, and then the north decline. This was only on the basis that we were completely funding the second stage using cash flow from the first stage. But in reality, we'll probably do a refin and start the second phase a lot quicker compared to this particular chart. This is just a quick snapshot of some of the geos and some of us from the board level, a board which has got 180 years of mining experience on it, focused on some of the cores. We're doing 10,000 meters of additional drill work, mostly met and hydrogeotech work. That's a location of where the box cut's going in and where the first decline's going in. And again, this is on the eastern side of the tenement. And again, just to highlight a number of the areas, lots of detailed components, and this is around the stage 1 mine plan that we're busy with in the DFS right now. We're expecting the grant of our mining right quite soon. That's literally, we're in the zone, no pun intended, in terms of getting our mining right from government. We've submitted all the necessary requirements and we meet all the requirements of Section 21. We've been doing quite a bit of work on the DFS already. We expect that DFS to be completed by the end of the first quarter next year and jumping into FID sometime in the second quarter. We've engaged with debt and equity advisors who are global leaders in their own right, and they've been fantastic in helping us look at all the different project permutations, but all put together looking very, very good. So cutting to the chase, world-class mineralization. This is a project which is in the absolute zone from a PGM project development perspective, very large resource and reserve base, high grade, low cost, and close to surface, very shallow, depths of under 500 meters. We've got ready access to infrastructure, skills and mining suppliers. We're not short of those types of skills in a project of this nature. And when you slip across to the right-hand side, we've got our corporate, just on the corporate side, we've got a fantastic community that are supporting the project. They see the enormous benefits of the 5,700 jobs that are going to be provided directly in this project when we are at stage 2. And they are incredibly supportive of what we're doing, to the extent that we had no hassles in terms of the 82 boreholes that we drilled on site. We've had an environmental authorization issued, and we've applied for the mining right a couple of years ago, and we're in that zone now to get that. Our optimized PFS gave us stunning results in terms of low all-inclusive sustaining cost, low capital intensity, taking it from an original $450 million total peak funding requirement to develop the whole project, stage 1 and stage 2, to a $279 million peak funding requirement. We do get some enormous credits from our chrome production. We will produce 350,000 tons of chrome as a byproduct from the project. That accounts for about 12% of our total revenue. If you look at our revenue stream, you're looking at about 28% being rhodium, 26% being platinum, 24% being palladium, and about 12% coming out on the chrome side, with 1% gold and a couple of other base metals. So fantastic project economics with a post-tax NPV of about $1 billion at current prices. So from a value proposition point of view, we literally are the most attractive PGM development opportunity globally. We're in the right neighborhood. We worked very closely with government and our local community. We've had fantastic support from our cornerstone shareholders. We raised $8 million in a capital raise in June. At par, no discounts, no options by our cornerstones, and that just gives you an illustration of the support for the project. Very strong board and management team taking it forward. We will be making some appointments over the next 6 months, particularly from the project management side, and we've got these attractive PGM prices which are giving us a really nice tailwind. Thanks very much for your time.